2024 is an election year, so there's no way the government will let the entire economy go down the drain, right? Right? That's what we're all still hoping. Everyone agrees it's not going to be an easy year to navigate with the recession deepening, but not all asset classes are created equal. So here are 15 asset classes or sectors that are going to perform well in 2024. Welcome to Alux, the place where future billionaires come to get inspired. First up, profit-first business equity. Profitable businesses are the new gold mines. Businesses that on a monthly basis spend less money than they make are now the absolute standard of financial success. Private equity firms have been scooping them up one after the other. Boring businesses have become a trending topic amongst your favorite financial influencers. Owning such a business, or at least a part of it, allows you to sleep just a bit better at night, but the operation part is becoming increasingly difficult. With suppliers pumping up their prices and the cost of goods going up, this will put pressure on the salaries of the people working for you. As long as your employees generate more value for the company than they're paid, you're good. Next up, cash. Well, would you look at that? Cash is actually an incredibly valuable asset right now. The golden rule here is, don't buy stupid shit. Hold on to your cash with every bit of energy left in your body because very few will have cash on hand when the opportunity presents itself. Don't be afraid to be super aggressive when offering to buy anything. Since cash is scarce right now, people will give you preferential terms and better deals for cash. It seems like inflation is under control for the time being, so if you've got the powder, keep it dry for 6 to 18 months, and you might just strike gold. Then there's Bitcoin. Cash and Bitcoin on the same list of thriving assets? Crazy, right? Not only was Bitcoin one of the best performing assets of last year, going from 17K to 44K in 12 months, but this year we'll see another halving. It's a technological change to the Bitcoin algorithm where the reward for the miners will be cut in half, making every new Bitcoin more expensive to create. Historically, prices have shot up around halvings. Some say the price change is already baked in and are calling the priest on this cryptocurrency, while others look at it as the only asset left. As for us, we haven't touched our stash. It's safe in cold storage. Strategic real estate. Not all properties share the same attributes. Some are simply superior to others. Great commercial properties are still going to cash flow well for landlords. Since businesses are looking for any opportunity to cut costs, relocating to a cheaper office is usually one of the first levers to pull. Mid-range, non-competitive commercial properties are going to struggle massively. Location and proximity to the city center is another plus. For example, most Airbnbs are gonna get hit. As people travel less, the money will flow to the top 10% of listings, and everyone else will struggle to find guests. Art. There's a saying amongst the rich that goes like this: recessions are for the middle class. The entire economy around rich people is thriving no matter what. A recession in the world of art, at most, forces some unique pieces to resurface on the market as people look to liquidate for profit in order to acquire more cash. Young people have caught the taste for art money, since it's no longer just a billionaire's game. According to Sotheby's, the number of collectors bidding on art worth $20 to $50 million surged 60% just last year, since now you can buy fractional shares in blue-chip art. Over 56% of these bidders favored contemporary art. Sound familiar? Well, it's the art our sponsors and friends at Masterworks have been buying up for years. Wealthy collectors, young and old, are rushing to find it because it's outperformed traditional investments for decades, and it still has potential to grow long-term. This caliber of art delivered over $45 million in returns to their investors since inception, and it's never been as accessible as it is right now. Because those investors didn't have luck or art market connections, they weren't even art experts, and because of Masterworks, they didn't need to be. Over 887,000 people have already joined the platform, and Alux viewers have been getting priority access for over a year now by going to masterworks.art/Alux or by clicking the link in the description. Abroad investments. If you live anywhere in the world where prices have simply gone crazy and there doesn't seem to be anything worth buying that actually justifies the price, we're looking at you, Canada and the UK, then it's time to look abroad. Spain and Portugal are the hot tickets in Europe right now. Buying an apartment near the sea for around $100,000 or a house with a decent piece of land for under $200,000 is something that's impossible to find in the West. If 15 years ago you struck gold buying property in Thailand or Indonesia, 10 years ago it would have been Dubai, Vietnam, or Croatia. Now it's looking like Colombia, Ecuador, and other parts of South America are where it's at. You can pick up a 2-bedroom Cartagena for under $50K. Consumer staples. No matter how hard the recession hits, there are some essentials that people still need to buy, so stocks in these companies will do well. Actually, consumer staples crush it during recessions. Business Insider looked at the performance of consumer staples in 2015 and found they'd beaten the S&P 500 by 49% over a 25-year period. However, most of that outperformance was due to their strength during 3 recessions. This is a look at consumer staples during US recessions. So if you're looking to make some plays in the market, this might just be your best bet. Financial indexes, or ETFs, you feel like you understand. We are big on indexes over here. The truth is, if you've got just a little bit of money, you're probably gonna do better if you use all of it to buy 1 or 2 stocks in companies you really believe in. If you're right, you'll do well, 40% plus returns. Vanguard Large Cap ETF VV, Avantis International Equity ETF AVDE, Emerging Markets China ETF, or find yourself a fixed income ETF where at least you know what you'll earn. You can search for these terms on your own. Personally, we're big on indexes. We dollar cost average every quarter, and in times of true recessions, we double down on how much we're buying. It's served us well so far. Drugs, big pharma, and health-centered subscriptions. From Ozempic to people now taking pills by the dozen, to an obsession with the extension of life among those who can afford it. Health is having a moment right now, a big one, with money being poured into the sector at an unprecedented pace. Wegovy and Ozempic changed the way that people think about weight loss and became category-defining products. In times of recessions, people usually consume lower quality foods, which leads, en masse, to higher health problems, so even more pills. Do-it-yourself services focused on money saving or money generating. Additional income has become the norm. Outside of delivering food or driving for Uber, companies that can supplement an individual's income will do extremely well, especially if the focus is on saving the user's money. Look, we're not going to be shocked if Groupon gets reinvented, if a cheaper version of Airbnb or Booking comes into play. The other focus will be on getting your life together. Most people have been overspending and lack basic understanding of finances or what it takes to build wealth. Although they don't live paycheck to paycheck, they live what we like to call holiday to tooth surgery, which is kind of the same thing. At the end of the month, you still don't have money left. The way you take control of your life is by learning the secrets of how money moves and what actionable steps you need to take to get more control over your life. If you go to Alux.com/app right now, you can get the Alux app that was designed to do just that and save you thousands of dollars in coaching fees, seminars, and whatever miracle formulas others are selling. The app was designed to create measurable progress in your life. Try it yourself by going to Alux.com/app right now. Precious metals. If you want to go basic, buy gold. It matched the performance of the S&P 500 last year, and it's likely going to do the same this year unless things go south really bad. In times of recession, gold outperforms the stock market by 20 to 40%, so think of it as a way to hedge your bets. Also, if you want to, you can buy gold bars and actually touch it, hold it in your hands, and you can't do that with a stock. And you know, most trading platforms offer you the option to buy and hold gold the same way you would do with stocks, so you might want to look into this. Gas and oil. The volatility of this sector has kept us away from it, but the traders that we know in this space have made a killing in the last year, and they're pretty optimistic about 2024. We'll talk about renewables in a second, but most of our energy still comes from oil and gas. War is usually great for this sector, and so far things don't seem to be quieting down on the Eastern Front. Solar and energy. As a sector, it's slowly trending up. It's one of the few safe bets over the next 20 to 30 years. The macro trend is here and it's happening. On the retail side, in an effort to minimize long-term costs, people would rather sacrifice the present and pay the cost for some solar panels and an in-house battery. At least, those who can afford it are considering this. On the business side of things, it's all about the carbon tax and the benefits that come with the transition to electric. International currencies. You might be thinking the dollar is doing really well right now, and you'd be shocked to learn that since they've been printing money like crazy, it's slowly falling behind other international currencies. One Swiss franc is $1.18 US. One British pound, $1.27 US. 1 euro, $1.10 US. Having your savings in multiple currencies, or at least in a more stable currency, can be your hedge against the money printer going brrrr. Cheap labor or immigrant human capital. There's always going to be someone who'll happily do your job for half the pay because they're coming from less than that. Human economic migration is probably going to be one of the sectors that we'll see most often on the news, as the boring businesses we mentioned earlier will need skilled workers that are willing to work for how the market, not the government, values their services. They'll work in your country and send that money back home. What are you seeing in your industry, Aluxer? Since we have people from all around the world here, how does 2024 feel from your perspective? Let us know in the comments. And since this is the first video of the year, of course, we'll keep the bonus part alive. Luxury products are stalling, even in secondary markets. For years, we've looked at the luxury market as a canary in a coal mine. And the secondary market especially has proven to be a really good indicator of how things are actually going for people who do have a bit of money. Now, for those of you who don't know what we're talking about here, there are businesses and platforms out there where people resell luxury goods, either secondhand or new. And when not even the discounted luxury products get sold, you know the rich are contracting and holding on to cash for other purposes. That's exactly what's happening right now. Luxury watches that used to sell for $18,000 to $20,000 early last year are now selling for as low as $9,000 to $12,000. At this point, one might ask themselves if watches aren't just NFTs for adults. Whatever the case, we will live through 2024 together, Aluxer, with some big changes to our content coming soon. These are the last few videos in this format as things are about to change. If you welcome it, write the word change in the comments. Let's see how many of you are still around.